So Alex, thank you very much indeed for joining us today. I guess sort of the obvious question is, what impact do you think the pandemic is having on the investment sector?
Yeah, thanks very much, Will. I think the first and immediate impact was clearly on people, and that was the first concern of the asset managers for the health and well-being of their staff. Quickly followed, of course, by operational resilience, making sure that they could maintain business as usual in this virtual environment we all find ourselves in. And I think not only on the technology robustness, but also looking at how the control environment can be maintained, in this virtual working from home environment. And many asset managers being very grateful of some of the regulatory forbearance we've witnessed in a number of different markets, including the UK. But what we have seen is, control environments have been put under stress given the volumes and market volatility. Where we have seen operational errors, we've seen, of course, a greater financial impact because of that volatility. So that was clearly a very important focus. And I think, it's pleasing to see the industry as a whole did pretty well in terms of shifting to this new environment and maintaining that operational resilience. I think some of the smaller firms, the mid-tier firms, probably struggled a little bit more. Maybe they had BCP plans for 3/4 of the workforce being virtual, but weren't necessarily planning for 100%. And therefore, we've seen more stress maybe at the smaller end. And also for those that maybe had a big offshore component and therefore also had to think about when India and other big offshore centers moved to a virtual environment, the implications that had for their business as well. But quickly after operational resilience, we've seen the agenda shift to financial risk, and clearly a focus on a combination of fund liquidity. And we've seen that both in some of the real asset products, as well as, of course, in some of the private markets, and even in some of the listed debt funds, particularly in markets like the Nordics, where corporate bonds are already thinly traded. And we saw sort of, a rapid closure of or suspension of a large number of funds, in that space. And a lot of that fund liquidity issues came from the difficulty with valuing the underlying assets rather than a redemption problem at this point. And that sort of valuation of assets being tricky, particularly in real asset classes. And of course, real estate has borne the brunt of that. But of course, that's also been seen in the debt space as well, and even in money market funds, particularly in the US. Then on from sort of some of those financial risks, we saw in the early days, quite a lot of concern around market infrastructure stress. And of course, significant volume and volatility is causing some stress, suspensions in trading, calls to reduce volumes by regulators, and some smaller financial markets indeed closing. And of course, that created a lot of concern. It appears that we're through the worst of that at this point, but clearly high on the radar. Credit risk, of course, is increasing. As we see, some concern for NPLs, some concern in terms of both credit risk on the sovereigns and the corporates, and I'm sure that is being closely watched by many asset managers. We've also seen product failure risk clearly been something that the industry has focused on. There's a number of sort of guaranteed products still across Europe in particular, and people really looking at whether those guarantees can be met in this environment. We've seen some of the issues in money market funds, which is sort of to some degree replays what we saw in the financial crisis. I would say we've seen more of that in the US than here in Europe, but there still have been concerns in Europe, both by regulators and by the industry. And in the ETF market, of course, we've seen some incredible volumes, which has led to some price dislocation between the underlying and the ETF. And I think big ETF providers have been working hard to make sure that show stays on the road, and so far so good. So I think overall we've seen some sort of significant areas of focus. We're not through that. I think some people talk about a second wave maybe, particularly as maybe some of those credit risks start to crystallize. But I think everyone's watching that very closely.
So we've sort of done with the immediate firefighting, but what are the sort of risks that if they're not on the horizon, they're at least sort of not immediately in investment management sort of leadership teams' faces that they're really starting to focus on?
Yeah, so I think we came into this environment really with a narrative that the industry was heading towards an inflection point. And that inflection point was really a result of some structural shifts we saw emerging in the industry and was sort of being accelerated by some cyclical factors. Of course, when we sort of started to articulate that narrative, we never imagined for 1 minute that we would be in a pandemic like we are. But the implications for COVID-19 is probably that it creates the trigger for this inflection point, and therefore some of the trends we were seeing before will be accelerated, some will be reprioritized. So, what do I mean by that? Well, I think it was clear that we previously saw, a significant pressure on revenue margin falling to operating margin. And therefore that was resulting in some significant pressure on the financials. When we looked at who was winning and who was losing, there were a smaller and smaller number of asset managers that were gathering the lion's share of net new asset flow. And many other asset managers had managed to do well as a result of a 10-year bull run, as opposed to really gathering, new growth through organic means. And what we saw was, with heightened market volatility, that underperformance by some of the asset managers was starting to become more transparent. That was leading to bigger strategic decisions, particularly around cost transformation, not just taking out cost, but making the business more scalable, making it more efficient. But it was also leading to some other bigger decisions around how to change the business model, how to focus on particular client segments, particular markets, particular products, a much more objective strategic review of the right to win of these asset managers. And for some, that was resulting in some M&A activity, disposing of parts of the business, more consolidation. And I think in many ways, we're going to see that accelerate. I think the other trend that clearly we'd been experiencing pre-COVID-19 was the shift to digital transformation, not just of the customer interface or the interface with the intermediaries, but the digital transformation, throughout the value chain of an asset manager. And I think in many ways, of course, this crisis has accelerated the need for that. I think when we look back in a year's time at who the winners were from this crisis, or maybe those that lost less, it's going to be those that had, very strong digital capability to continue to interface, with their clients, whether that's distribution or just communication. Those that were able to shift to this virtual working, those that were able to reduce costs quickly, and not just costs from a headcount perspective, of course, but costs throughout the value chain, make themselves more efficient and more scalable, and reposition themselves for growth, in future years. And I think that's what's going to be accelerated, as a result of COVID-19. And I think the inflection point is upon us.
So it sounds as though you think that sort of general management skills and experience are going to be even more important and valuable to investment management firms today than perhaps they have been in the past. Is that what you're seeing?
I think that's right. I think in two ways. I think, or maybe even three. I think some of the strategic thinking that now needs to happen probably hasn't had to happen since 2009. And I think, almost a generation ago, since we've had to be so thoughtful about the strategic direction of the industry, but also of individual organizations. So I think that's going to be very interesting. I think, we recommend that asset managers need to embark upon a multi-track strategy to continue to access pockets of growth while pivoting the business, into sort of new areas, whilst embarking upon significant strategic cost transformation. So that multi-track strategy, the execution of that is going to be complex, and that's going to require a level of change that's probably unprecedented, for this industry in the last decade or 2 decades. And that's going to require, different type of leadership and management skills to successfully navigate that level of change. And then I think, of course, lastly, and probably most importantly, asset managers are people businesses. And therefore the ability to continue, to bring together a diverse talent base and bring that together in an inclusive environment. And now, of course, in this current situation, virtually, is going to be critical to continue the performance of the business, not just from an investment perspective, but also executing on the strategy to reposition these asset managers for the new environment. And I think not everybody is going to be well equipped for that journey. Not everyone is going to be successful.
Great, Alex. Thank you very much.
Thank you.